my God, these fucking promises.
Hi, good morning.
Morning, Big Sis. How are you?
I'm fine. How are you?
Good, thanks.
Jules was telling her how we live together when she goes off to college, sleep in the same bed, and be together
We're
forever.
just waiting for the others to join us. So we're just going to wait for about 2 minutes. Okay, so the main thing I wanted to talk about before we get into the DMR, I just wanted to explain on risk management. Okay, so we've got guys doing the prop firm challenges. So this is mainly for them. So if you start with a $10,000 account, right? The main objective which they tell you not to breach is this. Do not lose 5% of the account. That's what they tell you. So if you want to protect this 5%, what you need to do is you need to make sure that you are risking only 1% per trade per day. So you can now break down this 1% maybe into 0.5% of 10,000 so that you can put in at least 2 trades. Okay. So, okay, let me just finish this. Okay, I don't know what's happening with my screen here. I'm trying to fix it. Okay, there we go. Okay, so 5% of the 10,000, right? You just use your calculator. So it depends with the balance you have. Maybe you've got 20K, 25, 50, or 100, the same thing. Calculate 5% of that amount. So you know that you are not allowed to have a $500 loss at all. Once you reach $500 in negatives, this account is failed, right? So now you break down this 5% into ones. So now you say 1% times 10,000. So that will give you $100. So each trading day, you should know that you should risk only $100. So if you go to your trade history, on a daily basis, the loss we should see is only 100 and nothing more. Right. So that means you'll be following this 1% rule. So now this allows you to have 5 tries. So you can trade today and lose 1%, trade the next day, lose another percent, third day, another percent. But obviously you're not going to lose 5 times. Right. So this brings us to the case of risk to reward ratio. Right. So that means for every 1% you are risking, you should be targeting 2% or more. So in terms of risk to reward, now that would be 1:2, 1:3, 1:4, 1:5, like 1:to infinity. Right. So if you risk 1% and you lose today, the next day you risk another 1% and you lose. The third day, if you come and get a 1:3 risk to reward ratio trade, you will recover your loss, which you did the first 2 days, and still end up net positive, like probably with plus 1% profits. So that's the importance of risk to reward ratio and making sure that you risk very little of your amount. So you could even break it down to say you are risking only, so 1% of 10,000, that's $100. So now you could risk it and put it like this and say, I'm risking only $30 on this trade. Maybe you trade in London session, then let's say it hits a loss. you can come back again, New York session, and risk another $30 and another $30. This is like for your day traders. So the total, even if you have 3 losses in a day, you've only lost $90, which is like almost just 1% of the account, which allows you to come back the next day or whenever you get it set up to come and recover your loss. So that's what I wanted to touch up on risk management. So now we're just going to pick a chart and do a bit of review. Okay, so I'm hoping you can see my screen there. That's Trading View Gold. Okay, so I'm just going to look at gold. Then after that, you guys can pick a pair which we can look at, or somebody else can share whatever they're trading, then we can analyze on it. So looking at gold, I'm going to start with it from the weekly. Okay, for me, weekly, I think it's going to be bullish, probably until this could be the first take profit. The second one, so this one almost, it's actually an order block for this one. So if you see now, the order block even covers this TP target which we had. So this is weekly. We're going to go to the, so from the weekly chart, I feel like price will push up if we happen to get more momentum to the upside. So I'll be looking for price to possibly push to the trend line, which I've just put now, and a possible break. So this red candle here, depending with how this week closes, could also end up being an order block. So now we'll be expecting our price to break, probably reject this zone, then come back and retest here before we actually break and proceed to go up. But this is the weekly chart, so that could take like a very long time to play out. But for now, I'm seeing this as our target, this area here. Right, so let's check on the daily. Okay, daily also looks like the past 2 trading days, which is last week, Thursday and Friday, price didn't really move much, almost like consolidated those 2 red candles there. But right now, I think we might be having bullish momentum. So we're going to wait for a break of these highs here. The highs for Thursday and Friday. Okay, so where are we looking to? So if price breaks the Friday's high here, we're looking for a continuation. So these highs here, if they're broken, then we want to see what price does when it comes here, but it should possibly break. Okay, those are my targets there. So if we break these 2 highs, then now it's possible we could be going bullish. If we break this high and this high, then definitely we're going bullish. So now we want to see what happens right on this area. Are we going to break today's high as well so that we can take profit on Friday's highs? Then if price fails to break, okay, you see there's a trend line there. So we want to see if price is going to break that trend line and push to break Friday's high, which will be our TP1 if it breaks. Then possibly TP2 will be on Thursday's highs, right, where we put that zone on top there. So we're looking for something like this. But we're also looking at this as our point of interest. So if we get a pattern here, we could actually look to sell this. We look to sell. Okay, that looks like an OB there. So remember, for gold, mainly for me personally, it's scalping and day trading. I don't know to hold like overnight. So we're just paying attention to that trend line, what happens on prices. So this is the 1 hour. I didn't check H4. Okay, H4, it looks like we broke a zone, retested it, we're pushing up. So H4 for me is bullish. So on any sign of a break or any sign of momentum on the smaller time frames, we will buy this, take profit on Friday's highs. Okay, this is Friday's high here. So that'll be from around 1839, 1838 area to take profit at around 1842 for TP1. But I'm just waiting to have more confirmations before I commit to this trade. So you can also go on smaller time frames like your M5 and just wait to see what price is going to do. So you can see here, there was a trend line, almost like a break and a retest, as you can see here. So if somebody was scalping gold right now, that could have been the signal candle, is that red one with a spike. But possibly if you're scalping, then you take profit here because this is an order block. So right now we can also wait to see what happens. But for now, let's just wait a bit and see what price does. So if I'm online on WhatsApp, I'll update as I take the trade. Okay, so possibly price can break this OB or it can reject, then push up. But if it breaks, then we're looking for price to come back. This is the 200 MA, this is a zone. So this could be a possible TP if they break this OB. So we just keep an eye on that one. Okay, while we're still on currencies, is there anyone who wants us to look at something else or somebody else who wants to share before we switch to synthetic indices? Is there anyone else with something else they want us to look at or somebody wants to share? Okay, is there anyone else with something they want us to look at? If there's no one, then I'm going to switch to synthetics. So synthetics, I'm looking at C5, which looks bearish at the moment. So I'm just gonna open a trade. Okay, why I've opened a trade here is because I've seen my price is rejecting okay, my price is rejecting the 13 EMA. Right, I'm seeing rejections. It's been a clean downtrend. So I believe we sent a signal to this trade last night. We sent a signal to this trade last night and we advised people to trail. So this is from yesterday. I think, yeah, we took a trade yesterday. Where did we take it? We take it. I don't remember. I think it was here, if I'm not mistaken. When we say we're selling, then we say we're trailing. then price just hugged the 13. So it's been a strong downtrend. That's why I'm also selling here, right? So we're hoping for a few spikes. Let me just check TP target. V75. Okay, after C5, we're going to check V75. All right, so based on daily, this is I hope, let me just zoom in. This is simple BTMM, or those who don't use moving averages or indicators. There was a break of market structure on the left hand side right here. Let me just try to zoom in. Okay, so there was a break. We were in an uptrend all this way. Then we had the first break here, but they didn't break this low. So price pushed back up, right? They induced more people to start buying here. As you can see, they even broke this high. So if you were aiming for a head and shoulder pattern here, it didn't come. This candle took us out, right? Then they extended the high a little bit. Then they pushed down. Then this move broke these two levels. So now we were looking for sales only, right? So when price pushes up, obviously we have to look for OBs. So here was the order block. So this is like basically the simple way to analyze your charts. You just need to look for where your trend is about to change, right? So basically you look for a break in market structure. When the structure was uptrend, then it was broken here. So when price is pulling back up, you look to your left for your order blocks. So you can go to your smaller time frames even, but here even on the daily, this order block was respected here, as you can see. Then they threw an RR candlestick pattern, then they just fell from there. So now they're coming into this order block. So we want to see if they're going to have momentum to actually break it. So I'm just going to extend it a little bit. Okay, so if we break this zone, remember this is the daily, we'll be looking for a possible pullback, then a continuation, right? But that will develop like in the next couple of days to come. But for now, all we need to look for, if we see that momentum is bearish, just look for order blocks, selling order blocks in there on the smaller time frame, so that when the pullbacks come, you can be able to jump onto the trade as well. So this is my daily view. So on the daily, bear this in mind. This price could also push back up all the way to this order block here. Let me just okay, you see this last green candle before the momentum pushed down. If you put a zone there like that, you can see that there is a possibility this price might want to come back up to test the order block and the trend line now, right? Then push down. So that's one thing we need to look out for as well. So this is C5 daily. We can still catch some spikes though, even as the price is going up, depending with how the channels will be drawn up or how the trend will be moving. So for now, we agree that we are bearish. And it looks like we might get a very huge candle here, a red one. That's why I'm selling. Day one is also now trading below the 50 level. So that means we have got huge selling opportunities. So let's go to the H4. Okay, H4. H4, also a nice move from the beginning of the week, which was Sunday from midnight Saturday, yeah, coming onwards. This was the move. So you can see 4 hour was just rejecting the 13 there. So this was also a clean sell. For those who do swing trading, you could have traded this one and held. and taken profit on these lows, of which your price would have gone to hit TP. But it looks like we still got momentum. We might pull back up, like I said. So now we just, all you need to do if it's a downtrend, mark your order blocks. So wherever you see a green candle standing alone and a bearish momentum coming after that, mark that zone as an order block. So that's where price can actually push back up, then continue falling. So let's see what each one has got. Okay, H1 looks like we might, if H1 doesn't close being fully green, it's 0.954 now, so it won't happen. There's a high chance we're going to have another big red candle. We've been bearish ever since here, where price formed a head and shoulder pattern. We've been bearish, price trading below the 50. So if your price is trading below the 50, you should look for sales only, mainly. So it doesn't matter whether you're using TDI as an indicator or you're using RSI or MACD or any of these oscillators. If any of the indicators you use has got a 50 level and you see the price ranging below that, you know you should only be looking for sales. The opposite is true for buys. So those who want to buy C5, it's just the same thing. Wait for your oscillator RSI to trade above the 50, then start looking for buys. As you can see here, when it was above the 50, all buys were valid. Right, when we came above the 50 here we were already in an uptrend from here, right? So we had like an almost head and shoulder pattern, but it didn't complete. Right, didn't come to this level here. Even this order block, the price didn't really come there, but the buy was valid still. You could have looked for your buy entries. So C5, I think I'll be looking for sells. Like right now, I just open a sell. So I want to see if I can scale in, and I also want to check where the nearest order block is on the smaller time frames. So on my smaller time frame, okay, I hope you guys can see. Okay, on my smaller time frame, my order blocks are these ones. Okay, I've got this order block here, which was almost tested but wasn't, right here. Then that price also left an order block here. So if this price decides to push up, it could push up as high as that order block. And by the time it gets there, it will be meeting the 50 EMA. Okay, this is your 50 EMA. You can see how sharp it is. It shows you that the downtrend is very strong. And price has just been touching on the 13. So I could look to scale in on this order block here. This green candle here, M15. Right, if you put your zone there, you can put your sell limit there. Then stop loss can go above this last zone here. Our stop loss goes above this last zone. Okay, so stop loss will be above that zone. Then we see what happens after that. There's a possibility price could come, play around here, then drop. But definitely I'm seeing a drop here, which could give about, it might give 100 pips. So it's basically from, at current market price, it will be 20 pips to 100. Right, if you catch it from here, if it comes as high as here, then it will be 50 pips to 100 or 150 pips target. So that's my view on C5. Anyone with another view here? Okay, if you want to enter a trade, which time frame should you look into? Okay, if you are day trading, it also depends with what you're trading. But if you're day trading or scalping, okay, I don't know what happened to my screen. Okay, what happened? Okay, let me just fix my screen. I can no longer see it on my side. Okay. Okay, so if you are day trading, this is what I would advise. So when you open your chart, you want to look at the daily, right? You look at your daily chart, no matter what you're trading. Let me actually do it on V75 so that I can just explain it same time. Okay, let me just manage my trade here. Okay, I'm just putting a trend line there. I have my last limits there. Okay, then my stop loss goes just above. I'll just put it here. Okay. Let me just open another order there. Okay. So the time frame which you look at, let me open V75. Okay, V75. Okay, that's V75. So usually if I open my charts, you always know it opens on H1. So I like to just look at H1 like this and say, okay, my H1 is bullish or it's bearish. So right now from the data we have, we've been a bit bullish, but we've broken the market structure on the left-hand side. So we could be selling. So to confirm that, so when you open your charts, you want to know which time frame you look at when you're opening a trade. So for example, let's say you're trading V75 or anything which you trade. Let me just put the template, or anything you trade, you would like to open the daily chart first, right? This shows you what's been happening the past few days. So for example, this is yesterday's data. Yesterday we were bearish, meaning we were going down. The day before yesterday was bullish, so was the day before that. But here we had a bit of a consolidation, right? So price is now respecting the 13. We expect the same here, but at the same time, before we commit to a buy, we need to see price break here. Okay. So on your daily charts, so right now we had a bullish momentum, but yesterday was bearish with almost equal momentum. So this is an RR candlestick. For those who study BTMM, that's your RR. So usually after an RR candle, price likes to push down most of the time. So what we're going to do here, you just look to your left. Is there any place where you can draw a zone or a trend line? So you got this previous low and this low, right? You put your trend line there. Okay, that's not so perfect. Okay, you put your trend line. So after you put this trend line, what you're saying is, if price decides to push down, trend line is where you take your profit, right? So while we're on the daily, we want to look, this was the last red candle before the push up, right? So that's an order block, which has been respected. All right, it's been respected right here by this rejection here. So if you're on the charts after this order block here, when you see these rejections, you get ready to buy and you would have taken profit on these highs, right? Then price, you see it's reversing. If we want to commit to a sell here, price is to break this order block again to the bottom side, possibly retest it and push to these levels, right? So this is the daily, so it could take a lot of time. So today could be tricky to trade because we're seeing that price is rejected an order block strongly, but at the same time, they haven't broken this high here, right? They haven't broken, that's the monthly high. They haven't broken it, they just rejected. So they might want to push back down, which is also a possibility. So when we go to the smaller time frames, now you have a bit of an idea of what might happen. So from the daily, you want to go to your 4-hour. So remember, you haven't opened your trade yet. You're still analyzing. You open your 4-hour. Okay, 4-hour, what's going on 4-hour, right? If you're expecting a buy, you look for bullish order blocks. By bullish order blocks, I simply mean the last red candle before the price pushed up, right? So the significant one is this one here. So now this is a zone on H4, which is inside a zone on the daily, right? Okay. So if you look at price now, you're looking for a possible sell into the order block, right? Then from here, we'll decide whether we want to buy or we want to sell. So you know that price might target this zone, this gray area. And inside that zone, there's an order block on H4, which is a buying order block, right? So price is to possibly come here before pushing up if it's going to continue. So after you get that view on H4, you look for places where you can put order blocks. So this is an order block. Yes, it was a buying order block because we were going up, right? So your trend is up, right? Your trend is up. Price leaves one red candle before it continues pushing up. So that's your order block, but it was also retested here and the price continued to push up. So you could have found your buy entry here. So now price is pushing down and it has broken that order block to the bottom side. Right, it's been broken by that red candle. The green one is coming back inside. So if I'm looking at V75, I'll look for possible sells, but at the same time, I'm looking for possible buys based on what we saw on the daily chart. Otherwise, it will be very best to trade V75 tomorrow after we see how the daily chart, the daily candle closes today. But in the meantime, what we can do is we want to pay attention on what's going on this zone right here. So we're going to look into this price to see if there is any selling order blocks. Since we're saying price might actually come here first before pushing up. So inside this price action, we want to look for selling order blocks, right? So you go to a smaller time frame. So now you are dropping on time frames looking for possibilities, right? Or probabilities. So H1, if you look at H1, where is your last green candle on that move down? Last green candle is this one. So this is the selling order block right there. So what you simply need to do is mark that candle. Okay, that's our order block. And here price seems like it's rejecting the 200 MA as well. So now, in case we look for a buy, so remember you'll be scalping. It's just like holding for your trade for like an hour maximum. We want to see if price is actually breaking back above this zone. So remember, we took this zone from here, retested for a buy. Price came down, rejected a bit, then broke. So now we want to see what happens in this area. If we get a rejection, then we are going to sell and take profit on this next zone, right? But if price shows us that now momentum is back to the upside, we could look to buy and take profits on this order block here. Okay, so this is how I would actually trade V75 if I was to trade it now. So let me just look for on M15. So one other thing, if you notice on TDI on the bottom here, they are not yet back above the 50. So if you want to buy, the buy is a low probability until price comes back above the 50 level. So from here, you can see we're now below the 50. So we're looking for sells, and price was just dropping. So if you move to M15, so when you want to take your trade now, you come to M15 or M5. So just to complete on that one, hoping that you'll be answered. Okay, you come to M15 and M5. So when you come to M15, you don't just enter. You look whether there's a pattern or his price tested a certain zone, whether from a higher time frame or an order block or whatever. Any of those, you look for what we call confluences or reasons to take the trade. So you can also put your trend line on M15 there. So there's this point and this point, right? So if we are going to sell, prices to break that trend line, right? So you don't just rush to sell without any confirmations. So on M15, as you can see, there's also order blocks here. Your last green candle before the push down. There's also this one here, right? The last green candle before the push down. So if we break here, possible buy and taking profit around this area, right? That's if we break the zone. If we don't break, I'm looking for a pattern, maybe an M. By patterns, what I mean is this: price hits a zone. And you can see there's a visible pattern, either an M, a head and shoulder, a W, or a V pattern. There has to be something which shows you that, okay, this price, the momentum is on the upside, so I should buy, or the momentum is on the downside, so I should sell. So to elaborate on that, you might need to refer to the Candlestick Trading Bible. You need to look at your candles as well. Okay, what do these candles mean? So if you are on the charts and you see price giving you this type of candles, this is almost like an RR candle, doji pattern, but it's clearly showing rejection on two candles. So if you are buying, you buy when their high is broken, that's the safe buy. Stop loss is just below here, right? Then you wait. Once you get a momentum candle like this is a bullish engulfing, right? We all know what happens next. Either price pulls back a little bit, then goes straight up. But on this instance, the momentum was too big. It's just pushed to this zone which we marked. So when you look to your left, that's how you determine where you're going to take profit. So on this particular trade, you could have risked this much in order to make this much. So that's almost a 1:2 risk to reward ratio. Okay, so I hope that's clear. So you'll be looking to take your entries on M15, where you look for your patterns, or M5. But if you're on PC, you can go as low as M2. But if you're on your phone, you can go as low as M5. So when you're on M5, you're basically looking for the same things. You're looking at your candlesticks, checking what happened, where is the price going, where is the momentum, is there any pattern, right? So if you notice on this one, I'm not sure if you were in a buy already, but your buy would have been validated after you see price come above the 50 here. You're looking for your buying order blocks, right? Where is my buying order blocks? Because this price is trading above the 50. So if you're on M5, you still look to your left. Where is my last green candle? So that's your take profit. That's your take profit. So if you're in a buy, whether you entered here or you entered here, this would have been your take profit, right? And this would have been your take profit too. And both take profits would have been hit. So if you're using indicators, make sure you have your TDI or RSI, or just make sure you understand how to use the indicator on the bottom. Otherwise, if you don't know how it works, it's best to remove it totally and just use price action. So V75, that's my view. So for now, I'm looking for, if price breaks here, I'll be looking to buy. But remember, the buy is also short term. I'll just be looking to take profit here. I'll be looking to take profit right here, right? So if I buy here, my stop loss will be somewhere there, right? I won't have a stop loss which is so far. So always make sure if you are selling, if you sell here, stop loss goes above the previous high. If you sell here, stop loss goes above the previous high. If you sell here, stop loss goes above the previous high. If you sell here, stop loss above previous high. If you sell here, stop loss above previous high. Previous high is where your price turned. Where you see a clear 10, you put a stop loss above there. So that if it's a market structure, price, if it's a clean downtrend, price will possibly drop before it comes to your SL. But if it hits your SL now, it means there might be a break of market structure and price is now coming up. So if you buy here, stop loss goes above previous low. If you buy here, stop loss goes above previous low. And markets always move in waves. So you can easily see, okay, this is my previous highs. If price is coming up, okay, this is my previous lows. So if you can work with that as your basics, I think it could actually help, especially in the long run. And if you are using proper risk, yes, you have 10 losses in a week, but you can also have 2 wins and still end up net positive, right? So that's my view. So if price fails to break here, then I'll be just waiting for confirmation of a continued downtrend here before I commit to the sell. But for now, if they break here, I'm looking to go long. So I hope you answered for which time frame to use to enter, and I hope you answered on V75 review. Is there any other questions before we round up? I think this session was recorded, so I'm going to share it on the Telegram group, or I'm going to share it on YouTube. I'll just let you know just now. So is there any other question? Any other question before we close up today's session? Any other questions? Was everybody answered? Okay, there was a question which asked which challenge. Okay, I'm going to explain that for you on WhatsApp. I'm going to DM you. I'll let you know. Okay, any other questions? Or anyone else who wants to share their charts? Okay, I see there's no questions and no one else wants to share anything else. So thank you guys for joining. We'll catch up later. We might have another session, maybe towards New York session. We might have a live trading session, but I'll let you know. All right, I hope we all have a peaceful week and a blessed day. Thank you for attending.